Yesterday, we took a look at a transaction that suggests that the big Wall Street beasts may feel it's safe to start hunting for deals amongst the fallout from the crypto crash. Today, we're going to take a different view based on an overnight headline, which is not significant in itself, but perhaps gives us a clue as to what's happening behind closed doors across the sector. So, CoinDesk reported that the Canada-based investment firm Cypherpunk Holdings has dumped all of its Bitcoin and Ether to ride out the current market conditions. And while we can debate the value of selling after such a huge decline, perhaps we are going to see a leg lower. And as we reported not long ago, Bitcoin miners are now dumping 100% of everything they mine, and that represents a huge sell wall to be overcome. We should remember the great financial crash of 2008 and how intertwined the financial sector had become and how vulnerable it was to financial contagion. There are signs that this has happened amongst prominent crypto projects too. A list has appeared on social media which shows the known ties and financial exposure that different crypto lenders have within the industry and to each other. The risk for the industry is that, ironically, a lot of influence has been centralized in a few projects and protocols who, in turn, have been compromised by bad investments. And that exposure may negatively impact solid projects with strong futures. And that's always the risk. Someone recently told us that they see Ethereum a bit like the Nasdaq, and we get the comparison. Instead of listing on the Nasdaq, you build on Ethereum and so on and so on. Well, if that's the case, then we're in the midst of the .com crash, and the surviving projects will be the eBays or Amazons of tomorrow.